So I see a lot of people save money in the bank because they think it's safe. But did you know this is probably not the best financial decision that you're making, because you could probably be losing a lot of money and not even knowing it. Stay tuned to hear what I have to say about this topic. Hi everyone, welcome back to my channel. It's Shantae Moore, certified financial educator. Thank you all so much for being here. Please feel free to like, comment, share this video. I look forward to hearing from your thoughts about this topic that we're going to talk about today, which is why you probably want to consider not having a whole lot of money saved, quote unquote, saved in some sort of banking, checking, or savings account. So I meet with clients one-on-one, and sometimes I come across folks who have a lot of money sitting in a bank. I mean, thousands and thousands of dollars just sitting there. And I often ask them, why? Why do you have all this money in a bank account? And their response to me is, well, I think it's safe. I really don't know where else to put it. And I think I'm getting some type of interest rate by having my money sitting there. And that might be kind of true, but I want folks to consider how you should actually use bank accounts and what would be the best way to grow your finances, grow your wealth, if that's what you're really trying to do, right? Because I mean, again, some people are fantastic savers, but they just don't know any better. They don't know anywhere else to save their money. So I want to talk about some things that you should know or consider when it comes to keeping your money in the bank. First of all, I do want to say I'm not a banker. I never worked in the banking industry or sector. I'm a financial advisor. I've always been in the investment and finance. I actually had an accounting background as well. And those are all different aspects of money. The one thing I always share with my clients is that banks are not a place where you will actually grow your wealth. I believe bank accounts should be used for everyday financial transactions, depositing your check, cashing checks, paying your regular bills, buying groceries, your normal day-to-day activities. I do not believe a bank should be used to save money or expect to grow money by having, a savings account or even a money market account at a bank. Those things do not grow your money. And I actually got the topic for this video from watching another YouTuber. His name is Prince Donnell, and I'll post a link to his video here because he, went into a big conversation about what banks actually do with your money. He did come from the banking industry and really talked about some of the behind the scenes workings of a bank, which is basically they use your money and your deposits and leverage your money to reinvest elsewhere. Because guess what? Banks are not stupid. They know how to take other folks' money. You basically, by depositing money, you take your money, you loan it to them. They reinvest that money elsewhere so that they can grow their balances. So the second idea that I want you to think of is, well, what actually are the benefits of using some type of banking, savings account, for example, which is where most people would probably use to save money for an emergency fund. And I actually think that's the only thing you probably should use a bank savings account for, is to have some funds available on hand for those, 2, 3 o'clock in the morning emergencies that come up and you need some cash available, ready cash available to withdraw from an ATM and pay for whatever expenses or whatever, costs that you need to cover that actual emergency. Now, I actually don't believe in putting your whole full emergency fund in a bank account. Yes, financial professionals like myself will say to have 3 to 6 months of savings for emergency fund purposes, but I don't think you need to put all 3 to 6 months in a bank savings account. I would say maybe a couple $1,000s, whatever you're comfortable with, again, that you have easy access to for those crazy emergencies where you need money right away. If you go and watch other videos on my channel, I talk about other alternatives to saving emergency funds, because that could be potentially thousands of dollars if we're talking about 3 to 6 months of income saved in a bank. Basically, you could use low cost, low risk investments and earn 4 to 6% interest versus earning 0.01% at your bank account. So on average, savings accounts give you about 0.09% interest that they'll pay you for putting your money and having it deposited with them at a bank. However, if you have 0.09%, that means if you if you saved $100, you would only earn 9 cents in actual growth. That's not building wealth. So earlier I was talking about how banks leverage your deposits that you put in place with them. And one way that they do that is by issuing credit cards. But let's think about this from a financial perspective. What are the average interest rates that credit cards will actually charge you? A bank will charge you through their credit card for when you borrow money or you use that credit card, that credit limit. The average interest rate is actually 17 to 18%, which means when you borrow money from a bank, they charge you 17 to 18%, and that's average, which means there are interest rates that are much, much higher and interest rates that are sometimes lower. It's the middle average, 17 to 18%. But on your savings, they give you 0.01 to 0.09%. I mean, you're lucky if you get maybe 1.5% interest on your savings. So who's actually winning in that financial transaction? The banks are, because again, they're not stupid. They know how to leverage money to where it benefits them. Now, I hope this video isn't coming off as me saying like, oh, banks are horrible, banks are bad. Again, they serve their purpose, but their purpose, in my belief, is not to grow wealth. The last point that I want to share with you is that because banks pay you such low interest rates, you're actually losing money by keeping a significant amount of your savings in a bank account. So again, we talk about the average interest savings rates about 0.09%. However, the cost of living, inflation, which is a big term that's being used right now and being paid attention to, averages about 3 to 4% growth over time. What that means is that your savings are not even keeping up with the cost of living increasing year after year. I hate to burst the bubble, but if you really think about the interest rate that you think you might be earning at a bank and saying, oh, it's safe or I get this interest rate, I don't even care if it's 2% interest. You're not even keeping up with inflation, which means you're actually losing money. So the whole moral of the story is if you're really trying to grow your wealth, you want to reinvest elsewhere, the bank is not the place to do it. If you're interested in learning about some of these alternatives to instead of using a bank or ways that you can create a bank, you be the bank. Let's think about that. Schedule a consultation with me at bit.ly/question for Shantae, and I'll be happy to engage in that conversation with you to see how I can be a resource to you in the future. Again, check on that link, that video from Prince Donnell. I have it linked below. Great video that he recorded with a lot of information and give you more in-depth insight to the behind the scenes working of banks. And don't forget to subscribe and hit the notification bell so that you can see my new video that will be coming out shortly. Talk to you soon.